What is your credit score? How's it calculated? Dive into that.
A credit score is a 3-digit number and it represents your credit worthiness. So lenders use it basically to analyze how likely you are to repay your debt. The scores typically range from about 300 to about 850 is like the max that we typically hear about. So the higher your score, the better that your financial profile is in the eyes of creditors. So typically when you start getting into the 700s, that's when it's considered like good. And then beyond that, in like the 800s, it's excellent. Anything below that is like, oh, could use some work. Welcome back to the Money and More podcast. I'm Madison Foster.
And I am Ryan Bowling. So, Madison, it's been a little bit since we have met. Tell me, what have you been up to?
I've been up to a lot of work. As you know, this is kind of our busy season. I'm also starting to feel, I don't know if you are yet or not, the stress of some of the holidays. I have people in my life that really inconvenience me by all having birthdays back to back. I've got 3 friends with birthdays like a week apart. I have a sibling with a birthday coming up and then Christmas right after that. And so I just feel like it would really behoove me if people would spread those out a little bit. So I am definitely feeling the pressure of that as well. What about you?
Well, they did not consult you in their planning, so that's unfortunate. Yes, here, of course, at work, we've been dealing with some fluctuating rates, which is always topic for discussion around our parts. So that's been interesting to watch, but we have a great topic today. Not necessarily about rates, but you never know, because we are talking about credit scores. So you have done a lot of research, a lot of writing over on the website blog on credit scores. So just tell me a little bit why this topic in particular seems to be kind of a passion for you. What's the draw? What's the interest in it?
Well, I think it's just something that everyone knows about, but I don't know that everyone really knows the ins and outs of it. I know for me personally, when I was growing up, it was something that was I was a little bit dissuaded from. Like I was encouraged not to utilize credit, and I can definitely see both sides of that. I think my dad was just trying to teach me financial responsibility. As we've talked about in one of our earlier episodes, it's very easy to get into debt very fast when you're utilizing credit. And so I think that he had, of course, my best interest in mind. But because of that, it was something that wasn't really talked about in my house. I didn't really understand credit a lot. I just kind of thought it was a scary thing that I should never touch. And then, of course, when I became an adult and I did decide to get a credit card, there was a lot of question marks about it. And it affects so many different areas of adult life. And so I thought that if someone that I would like to think is as financially literate as me had no idea about a lot of the different pieces of it, that maybe I could educate some other people on that as well. So I've done a bunch of different informational pieces for OMB Bank on that, just hoping to kind of provide some of that guidance for maybe people in a similar boat that maybe don't understand it fully or have some questions surrounding it or some misconceptions even.
Yeah, no, I'm glad that you do. You cover that topic in depth, which is great for, people trying to research and learn more about it. I do find it interesting because my experience growing up was different. So my parents, early on, I was probably a young teenager. They made me a authorized signer on their credit card. Now, they didn't just give me a credit card and say, hey, go start spending this. I didn't have that credit card in my possession for many years, but they still made me a signer to start building my credit history earlier. And that has been a benefit to me. Even now that I'm in my 40s, I still see the benefits of that because my available credit is larger, and that plays, as we'll get into, plays a part in your credit score. I have a long history of making on-time credit payments, even before technically it was me doing it, but there's still a history of it that's reflected in my credit score. So I do hear often that people shy away from credit cards because they see the APR on it being so high. But obviously there's, ways to combat that, which we'll talk about, but I do just find that fascinating.
One thing I wanted to throw out maybe to like our younger listeners, the first time that it became, I'll say, kind of an issue in my life was when I moved out when I was 19, 20, and went to get my apartment. Of course, that's a factor that people look at, that landlords or, mortgage lenders or whatever. So this is, again, it kind of goes back and forth. Like, I certainly don't want to encourage, especially a minor, to go about it either way. I think there's benefits to having credit already built up. Like in your case, I also think there's benefits to maybe me not dipping my toe into that, but I will just say that is a part of it when you go to get a residence. And so in my case, I was fortunate at that time in my career, I was already established in banking, which looked good for my age. I was in a different department, a different bank at the time, but I had a very stable income, especially for my age. And I was, working and in college and all that. So what my landlord asked me to provide was a bunch of like 12 months worth of income statements to prove that I had a consistent and stable income and that I could maintain a job. And that was what allowed me to get this apartment with no credit. But I would say, if I had to guess, that's probably the exception and not the rule. I don't know how many people, especially nowadays, do that. But I will just say to anyone that's maybe younger and kind of nervous because maybe they don't have any credit established and they're wanting to move out or take the next step, it doesn't mean you can't get a home. It's just you may have to find somewhere that will allow other substitutes as you build that credit, and income verification, things like that are a big one. So just make sure if you don't have any credit established, you do have a steady job and you do hold down a job and can show proof of income, because at the end of the day, they just want to know that they're going to get paid their rent in full and on time. And so there are sometimes alternatives. I will just say that. But
Oh, that's fantastic advice. And of course, like we said, this topic is actually huge. Like, we could do several recording sessions on this one. But let's start maybe at the beginning, at the basics. What is your credit score? How's it calculated? Dive into that.
okay, well, first of all, I do have to do kind of a personal plug because I built this big, huge page on the ownbbank.com website. So if you go to ownbbank.com/all about credit scores, everything that we talk about today and more is in there. So we're going to a deeper dive today, but for anyone that maybe needs like some visual or that listens to this episode and wants to know even more, I do have a page all the way built out on all of this stuff. And I've heard feedback that it's helpful. So just know we have that as well for when you're done listening to this episode. But first of all, a credit score is a 3-digit number and it represents your credit worthiness. So lenders use it basically to analyze how likely you are to repay your debt. So the scores typically range, assuming you have one established, because like I said, mine was technically 0 when I didn't, but assuming you have an established credit score, they range from about 300 to about 850 is like the max that we typically hear about. So the higher your score, the better that your financial profile is in the eyes of creditors. So typically when you start getting into the 700s, that's when it's considered like good. And then beyond that, in like the 800s, it's excellent. Anything below that is like, oh, could use some work. And then with that, there's 5 different factors to determine that. So do we want to jump into all 5 of those?
Well, you're here. You might as well.
So the first one is going to be the biggest and most important, and that is your payment history. So this is just exactly as it sounds. It's showing whether or not you've made on-time payments for any current accounts you have open, as well as any that were closed, because that shows up on your credit report as well. So if you missed a payment, or even if that account is now closed or it's a loan you no longer have, that still shows up on there as a missed payment, and that can be really detrimental and shows a negative on your credit report for quite a long time. I know in a previous episode, you and I kind of talked about that with like missing a mortgage payment and the far-reaching implications of that. So that's going to be the most important one, is making sure that you're making your payments in full and on time. The second one is going to be your credit utilization, which unfortunately for people like me is going to require a little bit of math, but we'll break it down for you. So this is just showing the percentage of your total available credit that you are using, which is why it's called a utilization rate. So a lower utilization typically means a higher score. Creditors like to see a credit utilization of below 30% for sure. I would say below 10% is you're doing really great. So that's what I would recommend. And then to calculate that, you're basically just going to take your total balance divided by your total credit limit and then multiply that by 100. So if you have more than one credit card, as an example, you would need to add all of those together to see what your total available credit is and then your total credit utilization. So as like easy math here, quick example, if you have 2 credit cards with $10,000 credit limit on each, one of them has a $10,000 balance and one of them you're crushing it and it's completely paid off, $0 balance, your total available credit between the two is 20,000. 10,000 plus 10,000 is 20,000, and your total balance is 10,000. So you would take 10,000 divided by 20,000, multiply that by 100, and your credit utilization rate would be 50%. So real high. We would need to then work on getting it down. But
Yeah. So this is where being on my parents' credit card I still have the benefit of that, because even though I'm not utilizing that, I have access to the balance of that. So it keeps my utilization far lower. So that's what, when I said earlier, the benefits of still being a signer on their card, even though I do not use it. This is one where it boosts my credit score a little bit because of that setup.
Yeah, absolutely. Yeah, because the more and that's again where it gets tricky and you have to kind of manage that, because obviously we don't want to recommend people have like an astronomical amount of available credit, because then that's another factor we're going to talk about is having too many. But like in your case, if you've just got yours plus maybe your parents' one credit card, and you're only utilizing on yours, that's always going to help your utilization rate for sure. So
Yep. So just a little hack we use there.
yeah. Okay. Third one is your credit history link. That's a pretty straightforward one. The longer your credit history, the more favorable it is to lenders. So again, I don't necessarily love the system. There's nothing we're going to do about it. But when you're very first starting out, you're a little bit disadvantaged right out the gate, because that is a factor. It's one that I would say has a low impact out of the five, but that is a factor that creditors do care about, is how long of a credit history you do have. So if you are younger or you're inexperienced with credit and you're just now getting established, that is a little bit detrimental. Not a huge deal, not going to tank your score, but until you have a couple years worth of payments under your belt, that's going to disadvantage you just slightly as far as your history. Fourth one is credit mix. So having a mix of different credit types, so whether that's credit cards, a mortgage, auto loans, that can positively impact your score. Again, that's a lower impact factor, so not a huge deal. Please don't just go get a mortgage to help your credit score. That's definitely not what we're saying. But if you do have a couple different types, that, in some senses can help. And then the fifth one is new credit inquiries. So this is one that I would say is like medium to high impact. The more inquiries, hard inquiries you have on your credit report, the more negatively that's going to impact your score. So if you have a bunch of, if you put in a bunch of applications for a bunch of different loans or credit cards in a 6-month period, that's going to make your score dip quite a bit. They do not like to see that you are having hard inquiries on your report in a short amount of time.
Yeah, so we work with mortgage lenders quite a bit, being in bank marketing. The one thing that I find that they tell me more frequently than I'm sure they would like to see is that, so say you apply for a mortgage and you're getting ready to do the loan, you're excited about the new house, do not go and start shopping for furniture, sign up for their credit card deals so you can get like some interest-free financing, be like, I got a new couch and new refrigerator coming. Do not do that stuff before you do your finish your mortgage, because that, like you just said, that impacts your credit score. Suddenly you look very different in the eyes of creditors.
It does, and it can actually disqualify you. So please don't do that. We get it, and it's like you said, it's something that's so common that we hear from our colleagues in the mortgage department. I get it. You're so excited, but don't do it. Or you're just like trying to make a whole 180 in life and get a brand new car too. Maybe we don't do those big things back to back, because that could disqualify you. So yeah, excellent tip.
Yes, absolutely. Wait on that. So if you're listening or watching this episode, then probably you're here because you'd like a little advice on how to raise your credit score. And that's something you've certainly talked about and written about quite a bit. So what tips, what advice do you have for people who are looking to boost their credit score?
Yes, I got a few tips here. So first one, pay every single bill on time. Again, it seems like a no-brainer, but it's very easy, especially when you are utilizing credit, to get behind. And getting behind on even just one payment can really have far-reaching implications, like we said. So payment history is the number one most important factor in determining your credit score. It accounts for 35% of your whole score. So quite a bit when you're dealing with 5 different factors. So even just one single late payment can harm your credit score. But if you're paying your bills on time, consistently, every time, and in full, that really does wonders for your score. So that's the number one and most important, I would say. And again, like we've talked about in previous episodes, not a requirement, but I would so strongly recommend that if you are going to utilize, say, a credit card, do not just pay the minimum balance. That's better than nothing. That's still making a payment on time. But if you are able to actually pay it off in full every month, you're going to save yourself potentially tens of thousands of dollars in interest. So that's just kind of a personal tip as far as paying it all off, but that has consistently been our recommendation. But just making sure you're making all your payments on time every single month and not missing one. And if it gets into a slippery slope where you're not able to make your payments on time, that's where we kind of have to go into, again, doing maybe like an audit of your budget. And are you spending beyond your means? Did you need to purchase these things? And if you are purchasing them, did you really need to finance them? And kind of have those tough conversations with ourselves.
You talk a lot about your credit score. How can people go look it up? Where do they find their credit score?
Yes. So there are 3 main credit reporting agencies: Experian, Equifax, and TransUnion. Every single one of them is required by law to provide you a free credit report once a year. You can also go through different like apps and things that will provide you like somewhat of a real-time update on your score. Because they're only required to actually update that report once a year, it's not going to be accurate to the number. And it also depends on which model they use, which one of the reporting agencies they partner with. But, you can always utilize like a Credit Karma. That's a good app. It's popular and safe, and that will allow you to check your score anytime just from your phone. But checking those credit reports regularly allows you to, stay up to speed on what your score is, first and foremost, so you kind of know where you're sitting. It also allows you to check for any errors, see what's contributing to your score. If it shows on there like, hey, maybe you have too many inquiries, you take a back seat on maybe applying for a new loan for 6 to 12 months or something. But it'll show you the different things that are affecting your score, whether it be positively or negatively. So you can either continue or stop doing those things. If there are any errors on there, it's usually important that you dispute them with the credit bureau absolutely as soon as possible, as soon as you notice them. And that can, if there is a true error on there, that can increase your score as well. If there's something that's reporting on there that shouldn't be, or vice versa, that could be a reason that your score is not what you think it should be. So if you see something that doesn't look right, report it right away.
So I have gone through that process a couple of times. Now I use Credit Karma. They send me, of course, push notifications daily. So I'm constantly in there seeing what they're reporting. And it is odd that, like you said, there are some differences between some of the agencies, because there is like a 30-point difference between them on Credit Karma. So sometimes when you're applying for loans and stuff, they, the lender may use a different agency. So it is important to, check pretty frequently with all of them to see what's out there and what's showing up. Also a good fraud deterrent. Protect yourself a little bit from identity theft. It will help let you see if someone's trying to apply for credit in your name and things like that. So awesome tips. You got anything else?
Yeah, 2 things actually. So to that end, as far as what you were saying, another awesome fraud deterrent and a tool that I don't know that a lot of people have available to them is putting a freeze on your credit. That sounds scary. Sounds like a big bad deal. It's really not. And it's honestly something I would encourage you to do, especially if you aren't planning on, purchasing a home, purchasing a car, opening a new credit card. If you're established with the lines of credit that you have and you're pretty settled in for right now, put a freeze on your credit. All that means is you contact the credit bureau and you ask them to freeze it. And that just means that no one is able to do a hard inquiry on your report. So that does mean that if you were to apply for anything, that would be unable to go through. But again, if you're just sitting on the credit you already have, that prevents fraud, that prevents your score from being affected negatively by putting in a bunch of inquiries or anything that's not in your name. So if you are not planning to do that, I would say as a good rule of thumb, make sure that your credit is frozen at any given time. And that's something that some people don't even know is an option. And it's honestly typically as quick as like a click or a phone call, and you can get it turned back on should you need it. You can unfreeze it and then you'd be able to access that again. So
yeah, it's something you control yourself. So I'm glad you brought that up. What was the other one?
Well, kind of just back to what we talked about earlier, as far as getting your credit utilization in check. Couple ways you can do that. So pay down all your debt. That's a gimme. That's what you should be doing anyway if you are utilizing credit. Only charge to your credit, which you can pay off in full each month. I cannot say that enough. And then also, if you are managing your credit responsibly and you feel like this is an option that you can handle, then you could request a credit limit increase. So if you are someone that has utilized your credit responsibly, oftentimes the credit card companies are more than happy to offer you more of their money to use on credit. So it doesn't mean you have to use it though. So I can't stress that enough. If you have a $10,000 credit limit and you request an increase and they give you a $15,000 credit limit per month, that doesn't mean you need to use $5,000 more dollars. It just means that that's going to help your credit utilization because now you have more available to you and you should still be using whatever you were using before and paying it off. But that's going to really boost that number, which again, boosts your score.
Love it. Okay. So we've reached about the end of our topic of conversation. Go ahead for the kids. Give us a quick recap. What is credit score? And then what are your favorite tips on how to boost that credit score?
Credit score, three-digit number that goes over your credit worthiness. It's what lenders use to decide whether or not they're going to give you their money and whether or not you can borrow from them. The 5 factors are payment history, credit utilization, credit history length, credit mix, and new credit inquiries. And then as far as raising it, pay every single bill on time. Be aware of your credit utilization, and if you need to, request a credit increase. And then make sure you are monitoring your credit report regularly. And if there's any errors, dispute them.
Yep. And then, like you said, don't be afraid. Put a freeze on your credit if you feel like you want it to stay in place. So say you have established yourself, maybe you're somewhere in that stage of life where you don't need to make any large purchases, then yeah, you can freeze it for a bit and then have a little extra protection that way.
Well, Ryan, as always, it's been a joy. I look forward to talking to you next month. I know we have some really, really exciting topics on the horizon, and we're already starting to kind of look into next year. So I hope everyone stays tuned for that. Give us a like, follow, subscribe to our channel, and stay tuned for next month.
Yeah, so this has been our 8th episode recording, and now we're looking ahead at what we're going to do for next year. So if listeners have any suggestions, feel free to drop it in the comments. We're looking for topics, so we'll take some comments and some feedback, see if we can't work those into future episodes. Of course, we'll take questions because that's something we haven't got into yet, but an opportunity. So feel free to drop some questions for us if you want to. We'll pick them up in future episodes. But Madison, let's get out of here. It's been a pleasure chatting with you. We'll see you next time.
See you guys next time. Bye. The Money and More podcast is owned by OMB Bank. OMB and its affiliates do not provide legal, tax, or accounting advice. You should consult your legal and/or tax advisors before making any financial decisions.